XRP is down 66% from its all-time high. The broader crypto market is in the middle of a real bear market, and nobody is pretending otherwise. But while crypto Twitter is declaring XRP dead, institutional executives are sitting over drinks at industry conferences saying the same thing they always say when assets are at the bottom of their range. It is time to buy. Today we are going to give you the honest picture of why this crash happened, what is driving it, and why the conservative case for XRP from current prices, assuming XRP fails at everything, still produces 300 to 700% upside. This is XRP verified. Let us get into it. Let us start with the crash itself, because understanding why it happened is the difference between panic and positioning. XRP dropped approximately 70% from its all-time high of $3.66, down to a low of $1.11. That is a brutal drawdown by any measure. But here is what most retail analysis is missing. This crash is not being driven by XRP-specific problems. It is being driven by a macro liquidity crisis that is hitting every risk asset simultaneously. And understanding that distinction is everything. The private credit and private equity fund sector is under severe redemption pressure right now. Cliffwater's flagship private credit fund just capped redemptions at 5% in Q2 after investors attempted to pull out 17% of shares. And this came after they had already faced significant redemptions in Q1. Partners Group, one of the largest private equity operators in the world, has capped withdrawals at one of its evergreen private equity funds. Blackstone, Apollo, BlackRock, and Blue Owl have all enforced redemption caps on their private funds. These are not small operators. These are the largest fund managers in the world, simultaneously signaling that they have more redemption demand than liquid assets to meet it. When these funds gate redemptions, the investors who cannot get their money out of private funds look at their other liquid positions, including crypto, and sell those instead to meet their cash needs. That is a forced liquidation cascade that has nothing to do with XRP fundamentals and everything to do with macro liquidity mechanics. The same pressure that is hitting private credit and private equity has flowed into private crypto hedge funds, forcing them to unwind positions and accelerating the drawdown in the broader crypto market. Layer on top of that the IPO liquidity vacuum. The SBI CEO Yoshitaka Katao, one of the most credible voices on XRP adoption in Asia, directly identified this in a recent statement. 3 of the largest IPOs in recent memory are approaching: SpaceX, Anthropic, and OpenAI. Institutions and high net worth investors who want exposure to those companies are raising cash right now. Some of that cash is coming out of Bitcoin and Ethereum ETFs, which have been experiencing consistent outflows. The XRP ETFs, notably, have not seen the same level of outflows and have continued to see inflows on most days. That divergence is a meaningful signal. The selling in Bitcoin and Ethereum is partially liquidity raising for the IPO cycle. The XRP ETF holders are not participating in that selling. That tells you something about the conviction level of the institutional XRP holders relative to the broader market. Iran and the oil situation adds the final macro layer. The Strait of Hormuz situation has created genuine energy market uncertainty. President Trump recently stated that the blockade situation may persist through Labor Day. That is months of sustained geopolitical risk premium in oil markets, which creates broad macro risk-off behavior across every asset class, including crypto. This is not a permanent state. Geopolitical situations resolve. The private credit crisis will work through the system. The IPO cycle will complete. And when those headwinds clear, the assets with the strongest fundamental cases are the ones that recover fastest and furthest. Now let us address the conservative case for XRP, because this is the framework that removes emotion from the analysis entirely. Assume XRP fails. Assume the entire institutional thesis is wrong. Assume Ripple never captures the FX market. Assume the DTCC tokenization launch does nothing for XRP price. Assume the Clarity Act does not pass this year. Even in that worst-case scenario, based purely on historical crypto cycle patterns, XRP reaching $5 to $10 in the next bull run is a reasonable conservative expectation. From current prices around $1.20, $5 represents 300% upside. $10 represents 700% upside. That is the floor case. That is what happens if everything goes wrong. And XRP just does what a top 5 crypto asset with a decade of institutional relationships does in a normal bull market cycle. Now ask yourself, what is the upside if the institutional thesis is right? If the DTCC XRP announcement comes, if the Clarity Act passes this summer, if JP Morgan, HSBC, and Citibank, all confirmed Ripple customers, begin deploying XRP at scale for cross-border settlement, the 300 to 700% is the failure scenario. The success scenario is something else entirely. Now let us cover what is actually happening on the institutional side, because it is moving in exactly the opposite direction of the price action. Bank of America just appointed one of its top trading executives as global head of digital asset transformation to lead its crypto strategy. This is not a junior hire. This is a senior executive appointment at one of the largest banks in the United States, signaling internal organizational commitment to crypto deployment. Société Générale, one of Europe's largest banks, has deployed its digital euro stablecoin on the XRP ledger. Mastercard announced plans to expand settlement capabilities to include stablecoin settlement, including RLUSD from Ripple. 160 former national security, intelligence, and law enforcement professionals signed a letter to Senate Majority Leader Thune supporting the Clarity Act. Ripple is expanding its Washington, D.C. office, growing its policy presence at the exact moment the Clarity Act is moving toward a Senate floor vote. The institutional activity is not slowing down because the price is down. It is accelerating because institutions buy infrastructure, not price charts. The DTCC-XRP connection is also building in ways that deserve attention. A 2025 DTCC patent document explicitly named the XRP ledger among blockchain networks capable of supporting tokenized asset workflows. Ripple Prime, through the Hidden Road acquisition, is already operating inside the DTCC's Fixed Income Clearing Corporation. The official DTCC participant list shows Ripple Prime alongside JP Morgan, Goldman Sachs, Citibank, and every major Wall Street clearing institution. And the DTCC confirmed its tokenization platform will operate across multiple chains, with Stellar already announced as the first partner. Stellar pumped 54% on that announcement. XRP Ledger is in the same patent document. The announcement sequence continues. Let me give you the technical picture honestly. XRP has been consolidating in a range since February, chopping sideways with multiple bull trap rallies that got retail excited temporarily before fading. The pattern shows a market that has not yet found its final bottom or its sustained breakout. Multiple technical analysts have identified the 78 to 84 cent zone as the deeper macro support level if current levels fail. That is a real possibility that disciplined investors prepare for, not by panic selling, but by having buy orders placed at those levels so that if the market reaches them, the position gets added to rather than abandoned. The investors who are calm, patient, and have their orders in place before the market moves are the ones who capture the best entry points. The investors who react emotionally to price action, either chasing pumps or panic selling dumps, are the ones who consistently miss both the entry and the move. The XRP ledger itself is building during this bear market in ways that the price does not yet reflect. Real-world assets on the XRP ledger are at $4.8 billion and growing. RLUSD is up 97% in 30 days. XRP ETF inflows continue even while Bitcoin and Ethereum ETFs experience outflows. 300 million Binance users now have access to regulated XRP ETF products. Japan's ruling party is building a yen stablecoin framework with XRP ledger connections. And the Clarity Act, with 160 former national security professionals now publicly supporting it, is moving toward a July Senate floor vote. The fundamentals are not deteriorating, they are strengthening. The price has not caught up yet, but price and fundamentals do not disconnect forever. Let me bring all of this together. The XRP crash is real, down 66% from the all-time high, but it is being driven by macro forces: private credit redemptions, IPO liquidity vacuum, Iran geopolitical risk, not XRP-specific failure. The institutional activity is accelerating in the opposite direction of price. Bank of America, Mastercard, Société Générale, DTCC infrastructure connections, Ripple DC expansion. The conservative failure scenario for XRP from current prices still produces 300 to 700% upside. The institutional success scenario produces something much larger. And the investors who are sitting over drinks at industry conferences right now, the people who actually move institutional capital, are not talking about XRP being dead. They are talking about how rare it is to get a quality asset at these prices. Stay informed, stay patient, stay positioned. Subscribe to XRP Verified. I will see you in the next one.